Hi, okay, today in this video we are going to talk about production concepts and cost concepts. So I've already given you a flavor of what's coming up in a previous video, but now I want to review some basic concepts with you. So the first thing we need to talk about are costs. What are costs? Now, we have economic costs that we like to consider. And an economic cost is a payment that has to be made to obtain and retain the services of a resource. So remember, we have four key resources. What are they? Land, labor, capital, and entrepreneurship. Now, in addition to those four key resources, we have specific names for those key resources. Now, the payment for land is called rent. Okay, so payment for land is called rent. Payment for labor we call wages. Okay. Payment for capital we call interest. Okay. Now, importantly, payment from entrepreneurship is a normal profit. So when we talk about costs in economics, we're talking about all the costs, not only the monetary costs that are outlined right here, monetary costs. We also talk about the implicit cost, and that's the opportunity of cost of using your own resources, your own entrepreneurial talent, and all of that gets rolled into a cost construct. Now, from an economist perspective, we look at two different types of profit. So one is accounting profit, and this is revenue minus your explicit costs. So explicit is money that you are shelling out to pay for the wages, to pay for your rent, to pay for utilities. That's an explicit cost. It's all detailed out for you. Okay, now an economic profit means that we are also taking out implicit costs or implied costs. Implicit costs, again, are those opportunity costs. What are we giving up to start this business? Did we give up a job that we could be earning money, but no, we decided to start a business? So we have to take that into consideration. So to summarize, economic profit is revenue minus economic cost, or revenue minus explicit cost minus implicit cost. Graphically, it looks like this. Okay, so remember, just as a point of reference, when we talk about revenue, what we really mean, sorry, that's not coming out. What we really mean is sales. Okay, so you all had this in accounting. What is sales? Sales is the number of units that you're selling, your quantity, and what price are you charging times price. Okay, or I always say total revenue equals price times quantity. Okay, so one of the things that we're looking at when we talk about economic profit is what is our total revenue, and then we have to take out our cost, and then that tells us what our profit is. So these two boxes represent the total revenue. From an economic perspective, we take out explicit costs and implicit costs, and you can see that profit from an economist perspective is much less than profit from an accounting perspective. Accountants do not take into consideration implied costs. Here's a problem. Linda sells 100 bottles of homemade ketchup for $10 each. Okay, so 100 bottles of homemade ketchup. So let's highlight that. 100 bottles. So that's your quantity. And she's selling them for $10 each. So what is her total revenue? Well, we already know. Total revenue, let me bring this calculator up here. I hope you can see it. 100 bottles, 100 times $10. That gives us total revenue of $1,000. Okay, so let's jot that down. TR equals 1,000. 1, 2, 3. Okay, the cost of the ingredients and the bottles and the labels was $700. So that is explicit. That means she had to shell out $700. Okay, so her explicit cost, whoops, her explicit cost, $700. So that leaves her with an accounting profit of how much? $300. Okay, that's her accounting profit. But the problem goes on. In addition, it took her 20 hours to make this ketchup. And to do so, she took time off from a job that paid her $20 an hour. So she is giving up some money here. So 20 hours of work times $20 is $400 of an implicit cost. Okay, so she didn't get paid those $400, so that's really a cost to her. So now we want to find out economic profit. So here we have, down here in our little table, accounting profit 300, and according to our formula, now we take out our implicit cost, which was, so it's going to be minus, whoops, again, minus 400. And what does that give us? That gives us a negative $100. Okay, so she actually lost money by doing this project of hers. Okay, so her accounting profit was $300 and her economic profit was negative 100. Okay, so if I went too fast, go ahead and slow down the video and walk through it step by step. Over here, this is a problem that you have on your homework, so I'd like to see how you do this. Okay, so that pretty much covers explicit and implicit costs. Let me know if you have any questions.